If you like the following content, please leave a tip at buymeacoffee.com/Whitley.
So here we are back again. Welcome back to Technology Investment Investigations. Today we're going to be diving into an interesting one, which is Desktop Metal Inc. It's a fascinating player in the 3D printing arena. Perfect for this channel, perfect investigation for us to blend in our unique SWOT analysis to decide whether it's worth investing in on any level whatsoever. So Desktop Metal operates in a burgeoning field of additive manufacturing. This is the 3D printing market essentially. It's a market pulsing with innovation. The sector is a battleground for companies aiming to revolutionize how we make, well, everything. From automotive to aerospace, healthcare to consumer goods, the potential is massive. Key competitors are strutting their stuff, but Desktop Metal seems to be dancing to its own tune, leveraging unique technologies for it to stand out against the crowd. If you look at some of the background to this company, it was founded in 2015 in the heart of a place called Burlington, Massachusetts. Desktop Metal has been on a mission to make metal and carbon fiber 3D printing accessible to a wider audience, including engineers, designers, medical professionals and manufacturers. So in that respect, it's kind of the Elon Musk Tesla of 3D printing. The CEO, Rick Fulop, and co-founder leads a team of pioneers including Johan Meyerberg, Jason Cole and several others who have collectively pushed the envelope in additive manufacturing. With a portfolio that boasts an incredible 650 patents and caters to more than 6,000 customers. Desktop Metal's innovation in printers and materials is not just impressive, it's reshaping an entire industry that's being built around us. Now, as always, the plan is to do a SWOT analysis of this company. This is the strength of the company, the weakness of the company, the opportunity of the market for the company, and any threats from the market to the company. So that if you're going to invest in it, you can decide whether it's actually worth investing in the first place. So before we geek out on the fine details of what's going on, crack on with the financials and have a quick breakdown of the structure of the company. So as of early 2024, Desktop Metal's financial posture is poised like a dancer in the spotlight, with a market cap flirting around $195 million and an enterprise value of $227 million. The company stands on the stage set by financial metrics that tell a story of ambition and challenge. Despite a dramatic narrative and a net loss of a staggering $460 million in the trailing 12 months up until this point, and a share price that's seen better days, the firm's stock is underpinned by a base of around 324 million shares, if I'm right, which are outstanding. These numbers set a backdrop of revenue totaling $197 million for the same period. This sketches a company, as with all technology companies, at a pivotal moment in its performance. Most of the technology companies that I reviewed on this channel are all in the same position. Lots and lots of money being poured into it as the company grows, as it builds its product, as it develops itself. The question is, are the structural things that we're going to analyse in the SWOT analysis enough for the company to survive the financial pressures that it naturally has to build up purely from starting up? Let's crack on, see what we can find out. So what makes this company stand out from the rest? What makes it a significant company for us to look at and invest in? Desktop Metal has been taking significant strides to strengthen its position as a competitive player in the additive manufacturing industry. This is the 3D printing industry. The company announced comprehensive cost reduction plans, which aim for an additional $50 million in annualized savings, which includes a 20% reduction in the workforce. That's not always a good thing. This move is a part of a broader strategic business review to align its cost structure with current market dynamics and accelerate its path to profitability, especially in light of challenging environment in the additive manufacturing industry. Desktop Metal CEO recently expressed a commitment to achieving profitability and genuine positive cash flow amidst softer demand, emphasizing the company's long-term positive outlook for the industry as it transitions to mass production. Big investors look at this and think this is a very good thing. I'm going to put this in strengths for now just because I think it could be a good thing as they've got past the startup phase. In a notable development, Desktop Metal and another company called Stratus were moving forward with a merger agreement, which was subject to shareholder approval. The merger aimed to combine the strength of both companies to drive innovation and offer enhanced solutions in the 3D printing industry. According to the terms, Desktop Metal shareholders are expected to hold approximately 41% of the combined company shares, with an exchange ratio fixed regardless of market price fluctuations. Always a good thing. This strategic move was seen as a potential game changer in reshaping the 3D printing landscape by leveraging the complementary technologies and market presence of both entities. Definitely a good thing. Furthermore, analysts have a positive outlook on Desktop Metal, with a consensus rating of moderate buy pretty much across the board and a price target suggesting a significant upside potential. This sentiment is backed by the company's efforts to navigate through its current challenges and capitalize on the opportunities presented by growing demand for additive manufacturing solutions in most sectors and in most industries. These strategic initiatives, combined with an optimistic market sentiment, underscore Desktop Metal's strengths and potential to overcome current challenges. The company's focus on cost reduction, strategic mergers, and alignment with market demands places it in a promising position for future growth and profitability in a dynamic and rapidly evolving industry, which at the moment is doing okay purely because of world problems, not because of the industry itself, but will probably grow significantly as we emerge from this environmental catastrophe that we're all going through. When we look at the actual products for Desktop Metal, they specialize in providing the additive solutions and focus on metal and carbon fiber 3D printing technologies that respect to the higher end of the market. So if we look at they have the 3D printers, they have a studio system which is designed for office environments. This brings metal 3D printing to engineers and designers. It's known for its ease of use and ability to produce complex metal parts with a variety of materials. There's a shop system which is catered to machine shops, so I guess it's similar to a CNC machine, but prints rather than cuts, and has a reputation for high-speed production and high-quality metal parts. It's a high definition rate, which is particularly important in 3D printing systems to be able to come up with a very fine, almost nanoline level of detail in the actual product. There's a production system which is aimed at industrial manufacturing. This uses something called a single pass jetting system, which achieves high speeds. Again, it's capable of producing parts at a large scale at a low price. If we look at the materials, it's aiming to do metal. So you've got steel, you've got stainless steel, you've got tool steel, you've got titanium, you've got copper, and you've got composites go with it. If you look at the stuff that you basically buy from Amazon, it's just plastic. It's like a form of nylon. This does high-end industrial stuff, so it's a very sophisticated what they're actually producing with stuff. The company itself also has a dedicated software system solution which goes into their products, which means there's a certain amount of centralization that goes around what they're offering the customer when they buy the product, and of course there's post-processing equipment that goes with it to allow you to kind of fine-tune the product afterwards. This is a really great scale of operation, and having a number of products that can cater to some industrial process from beginning to end. And obviously it's new for certain engineers getting into it, But it sounds really good, looks really good on paper, I think. So that's the positive spin, that's the good stuff about the company, that's the bit where I look like I'm trying to sell the company to you. Now let me try to unsell the company to you. Let me look at the weaknesses of the company. So Desktop Metal Inc. has faced a series of challenges that have sparked concern amongst major and minor investors, as well as industry observers. In an effort to address its financial health, the company has announced a significant cost reduction plan, which you've already gone through, and a 20% reduction in its workplace, which I've always mentioned is a 50-50 on whether that's a good thing or not. Laying off staff can have a huge impact on the culture of the company and its health. It's not always a good thing to cut payroll. Sometimes you have to bear that burden elsewhere. This move is part of a broader strategy to align the company's cost structure to the current market dynamics. Particularly, there's a downturn in the 3D industry market. It's 50-50, like I said. It's a good thing and a bad thing they're doing. It's good that they acknowledge that there's a problem there and they need to get in there and deal with the problems. But when you look at the plans for it, there's the additional $50 million in annualized savings that it needs to come up with. Tax charges of between $24 to $31 million, and the majority of these being charged on non-cash, basically on the investment in the infrastructure itself. Every tech company has financial difficulties at the beginning before it becomes something special. This company is no different, but it's still a 50-50. It is a strength that they recognise the problem, but it's a weakness that they're having to go through it in the first place. Further complicating matters, of course, is Desktop Metal's proposed merger with Stratus, a significant event that was expected to reshape the 3D printing industry landscape by merging these two companies. This has been a heavy topic of discussion amongst those who are interested in the subject. The merger is subject to shareholder approval. They'll be the main shareholders, not the big parties like you and me. And it's seen as a potential growth catalyst for both companies. However, Stratus has communicated concerns regarding the proposed transaction, highlighting the complexity and uncertainty surrounding such strategic moves in any industry, but of course in the 3D printing sector. And what this reminds me of is Cineworld versus Cineplex in the United States, when the big lockdown happened and Cineworld had to kind of pull out the deal, got sued and lost a lot of money. Mergers of any type make me very nervous, but when one company starts publicly saying they're a bit nervous, then it makes me nervous, and I've got to wonder whether it's actually worth the hassle. And you should too. Moreover, there is an analysis from Seeking Alpha, which presents a rather grim outlook for Desktop Metal, suggesting that the company's growth phase may be over. We can see this certainly in some of its financials. This analysis points to the intensive competition in the space and questions the effectiveness of the company's strategy, including the mergers and acquisitions, in sustaining long-term growth. This critique underscores the significant challenges that Desktop Metal faces in a sector where demand dynamics and technological advancements are constantly in flux, but brand recognition and reputation are definitely at the centre. Although technically it might be more than competent and fantastic, if it can't actually deliver, then it's going to be a problem. Of course it is. So these developments, they underscore a precarious position for Desktop Metal and the position it finds itself in. As it navigates these financial pressures, the competitive market and strategic uncertainties, while we remain optimistic about its long-term prospects, not everybody does, and this will continue for a while to come. Investment in product development and the operational efficiency. Any events can undoubtedly cast a shadow over its immediate future, and that's where the investors come into. Very few people, apart from the big companies, will invest long term. So for this company, the path to profitability and market leadership, which it does need, in addition to the manufacturing industry being fraught with challenges within itself, it's going to take a delicate touch of management for it to push through all this and come out on the other side in a very strong position. At the moment, the financials and its ability to be a market leader, primarily where its weaknesses lie. The technology is good, but as with all tech companies, it is the ability of the management to push it through and actually sustain itself as a company, not just as a startup. So it's the year 2024. What does the 3D printing industry look like to you and me? Well, to you and me, it just looks like what it is. It's something you make little toys with. But for industry leaders, they're expressing a positive outlook, and this is both in an internal and external business environment perspective. According to 3dprinting.com, a significant majority, around 62%, hold a positive view that the external conditions impacting the industry will improve. This is at a macroeconomic level, and as well as the market conditions that are affecting them directly. This is an increase from the previous year, and this is a very bullish outlook. And I'm going to assume they know what they're talking about. I'm assuming it's to do with the orders that are coming through and they're not just blowing smoke up our backsides. So from their point of view, the outlook for the market is positive. We of course have to look at the trends in the industry, and for 2024, the highlight of the industry's widespread adoption across various sectors are the take-up of semiconductors, consumer goods, aerospace, defense, medical devices, and dental industries. Dental industry is really interesting when it comes to 3D technology. If you think about it, most of it is putty in the mouth, squashed down, but having something to just scan it from a dental record, from an x-ray, and then print it there in front of you, that could be an incredible jump in fortune for most of these companies. So the additive manufacturing is increasing. It's being integrated in production applications across the board to mitigate the supply chain disruptions that we've had recently in the past couple of years. This showcases what looks like a capacity for local manufacturing and reduces the logistics of moving stuff around the world, which is another really interesting thing, is that industries will be going home with this to a certain extent. Having these do stuff, that's the little bits, rather than getting a company far away to do it for cheap labor. That's the end of globalization. That's really interesting seeing that come about. As I said, that the healthcare sector with dentistry, with everything else, that could be an amazing growth potential for every company that does 3D technology. You think about the amount of artificial bits and pieces that you need putting in your body, bespoke printing within the hospital on the day, rather than waiting 6 or 7 months for somebody to get around to manufacturing on a CNC machine or in a mold or something. That's really, there's a lot of growth there potentially for any company that's involved in this. You know, as well as personal medical care, medical solutions, the global 3D printing market has experienced a detailed expansion from low-end use for making, like I said, little toys and little bits of plastic pieces from your household, from your garage. The high-end industries are also starting to see growth from all this. We're seeing this in the automotive industries. Believe me, go look at some of the things that SpaceX is doing. A lot of that is 3D printed. It's not coming off CNC machines. 3D is basically the new industry for manufacturing going forward. We're seeing a diverse and dynamic market structure that is building around all of this. So any company which can do high-end stuff that you can invest in at this point in time, 25 years time plus, it's going to pay off, but it is a long investment when you're going to do that, whether you're going to do that, whether you're interested in doing that. So clearly I'm very bullish when it comes to this type of technology, and there are very few companies that you can actually invest in that just do this. Obviously companies like 3M and 1001 Chinese companies that deal with stuff like this, but it's not their main bread and butter. Looking at the industry as a whole, the optimistic industry outlook is coupled on a focus of overcoming the challenges and leveraging the opportunities for growth. This underscores the 3D printing industry's reliance and potential for continued innovation and expansion. As the industry matures, it really hasn't matured yet, it is the equivalent of a toddler in its nappies. The emphasis on developing new materials, integrating artificial intelligence and automation, and focus on sustainability is likely to drive further advancements and broaden the adoption of 3D technologies to pretty much every industry that you can imagine. Believe me, this industry is going to become the norm over the next generation. Whether the companies within it will be the big brand names is up for debate, and is likely to be part of the similar tech bubble that we saw back in 2000. I'm going to speculate that, I'm going to throw that out there. I think we're going to see a lot of companies start pouring into this as it matures, and a lot of them are going to start dying off. So the ones that are already in there at the moment, the dedicated players, the chances have yet to enter the market, but we're going to start seeing that at some point in the future. This is the thing, I'm very bullish about 3D printing. I think it is a fantastic technology that was always going to come up eventually. We always saw it in science fiction. It is a dyed-in-the-world part of our life going forward. But putting on my bare head and analysing the problems with the industry and the market headwinds that are coming up, if we look at it very delicately, we can see that the 3D printing industry is going to be facing a mix of challenges as it enters 2024. So, reflecting both the sector's resilience and hurdles it must navigate, it's looking at the simple parts first. The financial challenges, such as supply chain disruptions, inflationary pressures, and the increasing financial costs, are testing the entire industry's adaptability and the stability financially throughout the past 3 or 4 years. These factors have notably impacted the production schedules and the financial health of most tech companies, but especially within the 3D printing space. Startups within this and the smaller firms that rely on external capital for growth are going to be impacted quite heavily. We are seeing this. As I said, this is where you start seeing certain bubbles crop up. I don't know how many bubbles are out there, because I'm not an expert in the industry, but you're going to start seeing them, and I imagine at some point we'll see a collapse in the industry short term, potentially, as companies enter it who are too weak and viable to survive in the industry and actually have no place being in it. I think that a lot of money will get sucked out of it, but those who survive are going to do fantastically. Like I said, they'll be there in 25 years time. There'll be major brand names up there with the best of them. The industry is also experiencing significant transformation with a slowing investment climate because of everything that's going on, which is leading to a cautious approach to the adoption of new technologies. This has resulted in reduced consumer spending in non-essential sectors, and obviously in developing what they want. And there has been a slowdown in some of the things that I think is actually going to really explode at some point in the future, such as dental 3D printing. And they're obviously broader financial challenges for them within the market. We're seeing this in other sectors. So you see this within electric cars, you're seeing it within certain computer technologies that are out there. There is a slowdown as people are basically keeping their cash back for the time being. That's merely just as we go through the loop. We're at the low end of the investment cycle. Once we start getting towards the big part, that's where it's going to explode. Once you start seeing this 3D technology entering the healthcare market, more and more, you're definitely going to start seeing an explosion in the investments in companies and their need to expand rapidly as they catch up with the demand that's going to be imposed on them. So with the lack of certainty out there, the investment cycle at the moment basically means that tried and tested will win out over innovation and newness in the short term, and high-end stuff, industrial stuff that costs a lot of money will of course mean that tried and tested will win out. Small scale stuff will gradually creep in and take over. So the industry is weak purely because the world market is weak at the moment, and this has a profound effect on all the companies that are in there at the moment and industry as a whole. I think that's going to change as we come out of the cycle. 2024 presents a critical juncture for the 3D printing industry. This requires a strategic focus for companies on applications, the quality improvement, and allowing the market to stabilize enough for them to operate within it. The sector's ability to navigate the economic climate and adapt to the changing market demands, which will be out there, and this will be the pivotal moment of growth, is when we start seeing one or two products enter the market. I can see a future trajectory as a whole across the industry as being extremely positive. As I've said, I'm very bullish on this, but the negatives I can see in there are purely from the outside. The technology itself is really down to the designs that's creating. It's not down to the technology itself, and it's still subject to all the environmental problems that you would have with any industrial application. But given that some of the things you can do with 3D printing that you can't do with a normal CNC machine or any other manufacturing process, I think gives it a tremendous advantage for this century as a whole. And I think this is a very important industry overall. Yes, I'm still very bullish on this, even though I can see short term there are some serious problems there. So the conclusion: what do we make of Desktop Metal? What do we make of the 3D printing industry as a whole? The grand theatre of 3D printing and additive manufacturing, Desktop Metal stands as a company with a formidable strength and has obviously formidable and undeniable challenges ahead. Its financials, while showing the strains of a company in the throes of growth and expansion, also hint at a potential for a dramatic turnaround, depending on the market itself rather than what the company itself is doing. So as investors and spectators in this saga, we're going to be watching closely. The next move that Desktop Metal makes could make or break the company. It won't make or break the industry. Definitely worth a review, definitely worth looking at. It has great potential, but only if the market allows it, or should I say, if it's able to enter the market successfully. So that's it. Thank you, dear viewers, for joining me on this deep dive into Desktop Metal Inc. If you made it all the way through to the end of the episode, thank you very much. Hopefully you're a subscriber. If not, please subscribe, please like, and hit the bell for future videos. Remember, the world of technology investments is about recognizing the potential of a company, even if that company is particularly weak at the moment. My episodes are designed to break down what's there, not to advise you whether you should invest in it or not. That's down to you, that's down to your research. It's your money, it's your decision to invest or not. All I can say is that the industry for 3D is very good, and I just presented a company within it that may or may not survive. It's entirely up to them, really, more than anything. So until next time, stay safe, invest wisely, and we'll return again for another video soon. Ta-ta for now.